Welcome back to In Your Money. This evening discussing investment. My guest, David Shapiro, and you'd like to email, and you can send your email to info@anchorcapital.co.za. David, we're expecting monetary policy to ease. And what is the market expecting? And are we going to find again the market being disappointed that maybe only a 0.25% rate cut, not 0.5%? What does your crystal ball show?
We don't know whether it's going to. We're talking the US at the moment.
US.
It's going to be probably a quarter, maybe 50. I don't think it's going to be 50. I think they'll wait. It's going to take time for that to filter down into the economy. You know, remember they raised rates almost 5.5% in no more than 18 months. You know, at a speed that the markets weren't expecting. Now we're going to unravel that, but you can't expect the benefits to be felt straight away. It's going to take time for that to happen. On our market, it's too small to put 25 points in. You know, we're borrowing money at 11.75% at the moment. That's
our prime rate.
That's our prime rate. Now, some of them are lower than that, some are higher. But if you want to kick this economy, you know, get it kick-started, you can't take 25 points or 0.25%. It's got to be 50. We've got to get this down by, 2-3% to make it felt in the economy. I'm not an economist, and the monetary economists are going to attack me for this because I know nothing. I'm an accountant. But all I'm trying to say to you, Bryan, it's not going to make any difference if you're borrowing at 11.75 and it goes down to 11.5 and then to 11.25. I think this is an economy that really needs something to happen here to get it going. And I think in the US is still pretty robust. It's still doing pretty well. And they can handle maybe 0.25%. But we'll feel it only down
it's
the
only
line.
going to trickle into the economy because, as you say,
Yeah.
rates went up very quickly,
Yeah.
and now 0.25% not going to make a big difference. But from a sentiment point of view, it's going to be we're now out of this tightening and we're going down.
And I tell you why I say that, because you're talking about the rotation. You know, in other words, get out of those stocks that have run. We're talking technology, and go into those stocks that are going to benefit. Oh yeah, that makes sense, but what's going to benefit? You know, and are you going to feel it now? So I'm not a person who likes to invest in something that might happen. I like to see it happening. You know, I like to see the spending taking place in that. So I'm saying it's a bit too early, in my view, to make the rotations, you know, to rotate yet. It's going to happen, sure. The banks might benefit a bit. We might see more transactions taking place, but I think you're going to have to wait this one out before you see the actual benefits.
Well, let's get to Joe's email. Joe from Inslanga. He says, which currencies would benefit the most when interest rates start falling? Because we've seen the dollar weaken, the pound and the euro and the rand will strengthen.
Yeah. What's going to happen? We're guessing when it comes to currencies. Other currencies are going to follow suit. So the US, first out the blocks, they'll start to reduce. We're then going to see the ECB, the European Central Bank, and maybe the Bank of England. They've already made some cuts already. But I think what happens, and even with the rand, once we start reducing, then it takes away the advantage. You know, people are going to flow back into the dollar. And I also think with growth, America will be first out the blocks, and they're still a very powerful economy. So I think we'll get to these levels of 1750 or something like that. And from then on, I think the dollar will start to show its face again and strengthen.
Against the pound and the euro.
Against the pound and the euro.
Yeah. Because there's been some, this month there's been some big appreciation in those two currencies.
So I'm not quick to get rid of my dollars.
Yeah. And then Ian in Parkview says, in the last number of years, much of the advice given is to invest globally. With the rand recovery, would you still agree with this strategy?
Yes.
Because of the companies.
Just because of the companies. You know, we're an old economy. Bryan, you know what worries me? And I make a habit. It's like my daily routine, a discipline. I try to go through as many results as possible, you know, to see. And when I look at the PGM, today was, Sibanye came out with a warning about where they see the palladium price. You know, I'm trying to summarize it into quick sound bites. And I've been looking at Northam. I looked at Amplats. You look at the platinum companies. You look at the coal companies. Commodity prices are still low, and a lot has to do with China. And my concern about the South African economy, the South African market, is this kind of soft underbelly, which in my mind is the commodity markets or the mining markets. They've still got work to do, and they still, we're waiting for growth to come through. We're waiting for China to recover if it does. So for that reason, I'm not quick to, I'm holding back and waiting for it to happen. And for that reason, I still stick offshore.
Yeah. And then Philip in Krugerville says, I'm a trustee of a pension fund. What is your view to us moving a small percentage into hedge funds and even a smaller amount to Bitcoin?
No, for reasons I don't understand. I'm the wrong person to ask. I can't fault.
Well, you sit on the Sasol pension fund.
Yes.
Has anyone ever suggested to Sasol, buy some Bitcoin?
Doesn't even come up.
Yeah.
No,
Okay,
and nor will I even offer an opinion. But, there are people who've made money. And I can't fault that, but I don't understand enough about it. To put it another way, I like to buy businesses that do things. We spoke about NVIDIA earlier. I know what they do. They make semiconductors, which you need in fancy machines, or in call centers. In data centers. So I don't know what Bitcoin does. It's like holding a dollar. It's like holding a painting. It's for me, it doesn't offer an attraction. But there are a lot of people who like it.
David, and then another question that came while I was driving here. Someone said, we've always been in pay systems, American Express,
Yes.
MasterCard.
Yes.
The world is now becoming cashless.
Yes.
And aren't their earnings going to come under pressure? Because if all you're doing is using credit cards, aren't the traders who accept these cards going to be putting pressure on these type of companies to reduce the fees?
I think it's already taking place, and the Visas, the MasterCards, all of these businesses are adapting or adjusting their businesses for that. It's become a crowded area, because every cell phone company now wants to get into fintech, into different pay systems. They are evolving, and some of them are incredibly efficient. Everything is tap and go today. You don't carry cash. But I still like Visa, I still like MasterCard, simply because they're ubiquitous. They're all over the place. You have to use them. If you're traveling, you go on a trip, what do you use? You use your Visa or Master, or maybe your Amex card, and so on. So, and don't underestimate what they're developing, the pay systems they develop for merchants as well, who want to be ubiquitous, who want to be all over the world. So, it's a crowded area, and it's an interesting area, but I stick with Visa, MasterCard as well.
Then Justin in King Williamstown says, what is a good equity weighting for a growth investor with a 7 to 10 year time horizon? Well, you made the comment, no one's got a 7-year time horizon. But if you're a genuine long-term investor, what do you think your weighting
it depends
should
your age. It also depends on where
Well, we're
you
talking
are.
7 to 10 years. So
So you're talking if you're talking to a young man, I'm 100% equity investor. I'm not a. I'm
So am I, by the way. So am I.
I don't get fun holding bonds or holding those. I'm not. When you say diversification, I like to say, listen, I buy 10, 20 good companies and I stick with them. I get nice cash flows from some of their dividends. You make growth. If I need money, I'll sell some shares and so on. But so from my point of view, over time. Equity has proved to be the better, the less risky asset class.
David, we've seen enormous improvement, and people have made a lot of money the last 3 to 4 months in government bonds.
Yes.
In government and all types of bonds, because they've come down so much.
Yep.
Internationally, interest rates coming down. Is there scope there, or is that short term? How would you deal with that in a portfolio that's a long term portfolio, and yet bonds could happen in the next 12 to 18 months coming down?
There's a difference between the short and long term, because what's happening is the short rates are coming, but it does pull down the long rates. It makes the cost of borrowing lower, and therefore your bond rates I'm talking in terms of mortgage bonds, start to come down as well. I still think there's room. To make money. We've done well here. We've done well in South Africa, and I think we always used to promote going for long-term government bonds in South Africa. And anybody who's done that has done pretty well. I still think it's a good area here. If you can lock in over 10% or even higher, on 15-year bonds, where we now, 2022, 15-year bonds, I think for me it's a very good rate to get. It's because you don't have to do anything for the next 15 years. You're going to get that kind of rate. And I believe inflation's coming under control. Rates will continue to drop.
People just need to realize with bonds, if you pay a lot of tax, for pensioners who are paying a little tax,
Yes.
it's an excellent investment, particularly government retail bonds.
Absolutely.
But if you're paying tax, you've got to realize income is fully taxable.
Well, you just hope that your after-tax income,
Yes.
let's call it, say, if it's 10%, 5.5% is higher than inflation. Sorry, yes, higher than inflation, so you're getting a real rate.
Yeah. Well, I think investors are feeling a little bit more positive. I'm also beginning to hear snippets of good news that will have a positive influence on global markets. Investors are inundated with so much information. My advice is before acting, consult with your investment or financial advisor. David, thanks for joining us. Good luck to your team for the season, for Arsenal. I shall sit back and say, well, what are my boys Man United doing at Old Trafford? I don't know. It's important to note that our program is to provide information and should not be construed as advice. Next week's program, we're dealing with financial and retirement planning, and I'll deal with the two-pot system. And if you need to get hold of me, my details will appear on the screen. Thank you for watching, and good night.